What's up, viewers? Welcome to the channel. In today's episode, we're going to follow up on a conversation that we had on a previous episode about the cash secured put options trading strategy. If you look in the description below this video, you will see a link to the previous video we're talking about, and it's a good idea for you to go and watch that video before you come back and continue with this video. So in that video, we talked about how the cash secured put options trading strategy can be a fantastic tool to either generate income or reduce your cost basis on a particular stock that you don't mind owning. And so in today's episode, we're going to look at a true to life scenario and a real life example with ticker symbol GERN, which is a pharmaceutical company. In today's episode, we will look at the price trend analysis for GERN. We will also look at what would be an ideal cash secured put position that you can enter into and the capital required to enter into such a position. And then we will analyze the immediate returns that you can get on such a trade and what could happen at the end of the options trading contract period, and how the scenarios that could play out could affect your investment position. Today we discuss ticker symbol GERN, cash secured put. All right, let's get it. So it's the 27th of December 2022. Ticker symbol GERN is trading at about the $2.07 mark. And if we look at the simple trend analysis, what you will find is since September 2022, GERN seems to be bouncing off the $2 mark and the $2.50 mark. And so it seems to have established a sideways trading pattern, which means that one can safely say that one is neutral on this stock. And if you were to enter a cash secured put trading strategy, you would want to look for a strike price that is below the $2 mark. And hopefully that should mean that you can enter into such a cash secured put and expect to come out receiving your premium and the contract expiring worthless, which means that you get to keep your premium and the collateral that you will set aside. If you look at the options chain for ticker symbol GERN, you find that it is a monthly options chain. And when you go down to the put, the next expiration date for the put is the 20th of January 2023, which is about less than a month away. And so if you look below, the $2 strike price is attracting a put price of 50 cents. But if you want to be on the safe side, you would want to go for the $1.50 strike price, which is attracting a price of 25 cents. Now, what this means is that if you sell a cash secured put contract at the $150 strike price, you will receive a premium of 25 cents per share. And if there are 100 units of shares in one contract, this translates to a $25 payout that will come to you, and the collateral that you'll be required to put up to enter into such a contract will be $150 multiplied by 100 units, which is $150 per contract. All right, so let's look at the analysis of going into a cash secured put options trading strategy for ticker symbol GERN. As we mentioned, the price as at the 27th of December 2022 is around about $2.08. And we said that if you sell a cash secured put at the $150 strike price, you will receive a premium of 25 cents. This means that for 100 units of shares at that strike price, you'll be required to put up an upfront capital of $150, and you will receive an immediate payment, less fees of course, of about $25. As we noted, the cash secured put options trade that we talked about here is 24 days away, which will expire on the 20th of January 2023. Now, what are the possible outcomes? The first one is the price of ticker symbol GERN trades above the $1.50 mark. And if we go back to the chart, we see that the last time GERN traded at the $1.50 mark was in June 2022, which is about 6 months in the past. And we're seeing that, as mentioned before, GERN seems to be bouncing between the $2 and the $2.50 mark. So there is a high probability that ticker symbol GERN will not drop to the $1.50 mark. However, if it does drop to the $1.50 mark, then one can say that given this current price trend, that is not a bad price to pay for one to acquire ticker symbol GERN. But be that as it may, if the contract expires worthless on the 20th of January 2023, what will happen is you will keep your $25 premium that was paid to you, and the $150 collateral that you put up will also be released back to you for you to be able to execute another trade. So you will come out with a total of $175 less transaction processing fees. This translates into a 17% return in 24 days. If you're able to generate 17% return every 24 days, then within a 365-day period, you will more than triple your investment amount. In fact, you will almost have 3.5 times your investment amount at the end of that 1 year period. Now, the flip side to the coin is you get assigned. Assignment means that the price of ticker symbol GERN drops below the $1.50 mark, and you have to pay $1.50 for it. Because you have received the 25-cent premium at the beginning of the trade, your actual cost of buying ticker symbol GERN at assignment will be the $1.50 strike that you paid less the premium, which is the 25 cents, which means your actual cost is $1.25. And if for any reason ticker symbol GERN is trading above the $1.25 mark by the 20th of January 2023, you can sell your shares in the open market and realize whatever profit potential is coming to you, even if the price is below the $1.50 mark. So, for example, assuming ticker symbol GERN is trading at $1.30 at expiration, and you buy it at $1.50, and you immediately sell at $1.30. Because your cost basis is $1.25, you would have made a profit of 5 cents per share, which means you will still come out on top. The only time you will lose money altogether is if ticker symbol GERN is trading below $1.25 as at January 20, 2023, which, given the trend we're seeing here, is a long shot, but nothing is impossible. And that means that this is a pretty simple and a relatively high reward potential trade that you can execute on. There we have it, ticker symbol GERN. as a potential candidate for a cash secured put is what we've looked at today. And we've seen how at a $1.50 strike price, there's a high probability that if you sell a cash secured put, you could come out with a 16 to 17% return on investment within a 24-day period, which translates into an annualized opportunity to more than triple your investment collateral. And we've also seen the flip side to the coin where you could end up coming out with a very reduced cost basis that allows you the potential for a higher upside if the underlying asset does appreciate a little bit. So this is an example of how a cash secured put can be deployed as either an income generating options trading strategy or an options trading strategy that can be used to reduce your cost of acquisition of a particular stock at a price that you really want to own that stock. Thanks for joining us in today's episode. We hope you enjoyed it and you found it informative. If you haven't done so, as always, please hit that subscribe button. And while you're at it, do yourself a favor, hit the notification bell. There's no point subscribing if you are not going to hit the notification bell, because the notification bell is what tells you when new videos are uploaded to the channel. If you've got a question, leave that in the comment section. We'll respond. If you know of another stock that can be used for a cash secured put to generate double digit returns on a monthly basis, please let us know in the comment section. If you like the video, please hit the like button so it tells the YouTube algorithm to help us spread the word. And if you know someone that will benefit from this video, please share it with them. You can also check us out on Twitter and Instagram, and there's a link to our TikTok channel. There's also a link to a free upcoming resource that will teach you financial literacy and how to make money on the stock market. So you want to go ahead and sign up for that free training that is being developed on this channel. See you on the next episode.